Good morning, everyone, and welcome to today's episode of For Our Financials Financial Forum. On today's show, we're talking blockades, breakthroughs, and buy the dip. Finance in Focus is going to talk about from fear to fuel, what happened with last week's rally. And as we continue our gender wealth discussion, this week we're talking about Gen X Black women. So stay buckled up. This is going to be a good show. So looking forward to it. We'll be right back with Markets in Motion. All right. Again, welcome everyone. Buckle up, as I said, because today's global landscape is moving fast and markets are reacting in real time. The dominant story continues to be the Iran conflict and the ripple effects it's sending through energy markets, through these trade routes, and investor psychology is really being impacted. Over the weekend, we learned that President Trump was weighing the possibility of resuming limited military strikes in Iran while maintaining the Strait of Hormuz blockade as leverage in ongoing peace discussions. Now, that's a major escalation point because Hormuz isn't just a regional choke point. It's one of the most strategically important waterways on this planet. Roughly a fifth of the world's oil supply flows through that narrow corridor. And that's interesting in how quickly the diplomatic machinery has kicked into gear. Pakistan, Egypt, and Turkey are all stepping in, trying to broker this deal, a path toward this de escalation. Axios and CBS News both highlighted how these countries are essentially acting as intermediaries, shuttling messages back and forth to keep the door open for negotiations. Now, that's important because as we're, leaning on this, it made the markets quite wobbly last week and up and down, but they finally kind of bounced back. So as we're saying, this switch and this back and forth and all this is really kind of making things topsy-turvy. But Iran's response has been really sharp. They're calling the blockade illegal, labeling it as piracy, and warning that retaliation is on the table. So we're watching a very delicate balance where every headline has the potential to shift market sentiment.
Yeah, and then what makes this moment kind of even more complex is the way global powers are positioning themselves. I think it's stepping forward with strong language, warning that the blockade threatens global trade, and urging an immediate ceasefire. At the same time, U.S. is threatening a 50% tariff on China over reports that Beijing shipped air defense systems to Iran. So now we've got geopolitics, trade tensions, and energy security all kind of intersecting in a way that markets absolutely cannot ignore. Experts are warning that the U.S. naval blockade could provoke a direct response from Tehran, and that's where kind of the risk premium starts to build. Reuters pointed out that even with a fragile ceasefire in place, the blockade itself could strain the situation enough to reignite conflict. And then you have the FT reminding us that Iran nuclear standoff has been simmering for 2 decades, multiple failed deals, multiple cycles of hope and disappointment. And then the latest rounds of talks showing that that same diplomatic fatigue. So when you put all of this together, you get a market environment where geopolitical risk is not just a headline, it's a pricing mechanism.
Yep. And then that leads to the energy markets, and then they're under pressure. So let's shift into the energy story because this is where the geopolitical tension becomes economic reality. So oil tankers are already rerouting to avoid the Strait of Hormuz. Reuters reported that most operators are steering clear entirely, while Bloomberg noted that 3 tankers attempted to navigate the strait anyway, which tells you just how high the stakes are for companies that depend on those routes. Every detour adds cost, adds time, and adds uncertainty. And the administration is taking a very strategic approach here. They're pairing the blockade threat with a pitch for countries, especially China, to buy more U.S. oil. That's a bold move, essentially saying if you can't get it from Iran, come get it from us. But analysts are warning that this could spark legal battles and anger countries that rely heavily on Iranian crude. So we're watching a geopolitical chess match where energy supply is the bargaining chip.
And then Europe is stepping in as well. So we got France and the UK. They're preparing to host a conference for a multinational mission to ensure free transit through Hormuz. And that's a significant development because it signals that this is no longer a bilateral issue between the U.S. and Iran. This is a global supply chain issue. I mean, major economies are preparing to defend the free flow of energy. Meanwhile, Saudi Arabia's crude sales to China are expected to drop by half next month due to disruptions caused by the Middle East conflict, and that's a massive shift in global energy flows. When you combine that with the tanker rerouting, rising insurance costs, and the threat of military escalation, you get a energy market that is extremely sensitive to every headline. That's why oil prices have been grinding higher, not because of demand, but because of uncertainty.
Exactly, Jeff. And then that leads to this economic fallout. So let's talk about that. President Trump has already suggested that U.S. gas prices may remain elevated heading into the midterms, and that's raising concerns among GOP members who understand how sensitive voters are to fuel costs. Meanwhile, corporate leaders and government officials are warning the administration about the economic risks of a prolonged Middle East conflict. Higher energy prices feed into transportation, manufacturing, agriculture, everything. Bloomberg reported that a full blockade of Hormuz could trigger global economic pain. Rising oil and gas prices could fuel inflation, slow growth, and put pressure on central banks that are already trying to navigate a soft landing. And the IMF is expected to downgrade the global economic outlook next week, citing the rising cost of the Iran war. So this just isn't a geopolitical story. It's an economic story with real implications for households and businesses.
And then the ripple effects of that are global. So China's exports are slowing as AI-driven demand meets the reality of the Middle East disruptions. Germany just approved the 1.6 billion in measures to ease rising fuel prices for consumers. And so we're seeing government step in to cushion the blow, which tells you how widespread the impact is. I mean, when you zoom out, what you see is a world economy and that was already dealing with structural challenges, inflation, supply chain adjustments, shifting labor markets, now being hit with a geopolitical shock that affects energy, trade, and investing confidence. That's why markets are so sensitive right now. Every piece of news has the potential to shift expectations around inflation, interest rates, and growth. And kind of leading that in, there's a little twist, and that's despite all of this, markets rallied last week.
Figure.
Hope won out over fear. Exactly. So investors started betting that the ceasefire might hold and the Strait of Hormuz might reopen. S&P 500 rose 3.56%. The Nasdaq jumped 4.68%. And the Dow climbed 3.04%. The international developed markets gained a little over 4.5%. And that's a strong week by any measure. And tech led the way. I mean, what's interesting is that tech is now relatively cheap compared to the pre-Iran conflict valuations. It's like Morgan Stanley, Mike Wilson, and J.P. Morgan. Some people from J.P. Morgan both know that being cautious, calling this a buy the dip moment. This is notable because when the skeptics start turning constructive, it tells you something about where the valuations are. So
Yeah, and
interesting
that AI
stuff.
story continues to reshape this landscape.
Mm-hmm.
AI is absolutely punishing legacy software providers right now. But the long term story is still being written. Some analysts argue that software embedded with AI will ultimately be the winner. So, not the flashy standalone AI tools, but the companies that integrate AI into their core products. When you look at the data, the SPY versus the IGV ticker symbol over 30 years, the correlation is 0.98. So that's incredibly tight. It tells you that software remains a foundational driver of market returns. So even in a world dominated by AI headlines, software is still the backbone of the digital economy. So that'll wrap up our markets in motion section, and we'll be right back with finance in focus. All right, so we're back with our finance and focus section. So let's shift into this section and break down last week's market action. So the rally we saw was driven by a combination of geopolitical optimism and resilient economic data. Monday started with modest gains as investors watched the April 7th deadline for Iran to allow free flow through Hormuz, which didn't happen. There was a sense of cautious optimism. Markets weren't convinced things would improve, but they weren't pricing in disaster either.
Yep. And then Tuesday brought a dip early in the session, but market kind of recovered after Pakistan asked the U.S. to push the deadline out by 2 weeks. And that was a psychological relief valve. It signaled that diplomacy was still alive, and that gave investors permission to breathe a little bit. Wednesday was the real turning point. The White House announced it was suspending attacks for 2 weeks while considering a ceasefire proposal. Stocks exploded higher. All three major indices gained more than 2.5% in a single season. I mean, that's kind of the move you typically see when markets shift from fear to relief. And by Thursday, the Dow turned positive for a year. Even Friday's inflation report, which showed headline inflation rising to a 2-year high, didn't derail the rally. So,
Yeah, so let's unpack that inflation report. Headline inflation rose 3.8% year over year, up from 2.4% in February. But the key is that most of that jump came from a 21% spike in gas prices. Investors expected that. They knew the Middle East conflict would push energy prices higher, but not
yeah,
that high.
exactly. But that's why the markets kind of shrugged it off. Core inflation, which strips out food and energy, came in at 2.7%, slightly below expectations. And that's a number the Fed cares about. So even though the headline number looked scary, the underlying trend was stable. And that's what allowed markets to keep climbing.
Yep. So here's what we're watching this week. Oh, we got a full slate of economic data. Existing home sales on Monday, Wednesday, we got import prices, home builder confidence. Thursday, we got jobless claims, industrial production, capacity utilization. And Friday, we've got housing starts and building permits. So each of these reports will help share expectations around growth, inflation, and probably a little bit into what the Fed's next move may be.
And yeah, earnings seasons is also kicking into high gear. And this is a big week for financials and consumer facing companies. So on Monday, we got Goldman Sachs. Tuesday, we got JP Morgan, J&J, Wells Fargo, Citi, and BlackRock. Wednesday, we got Bank of America, Morgan Stanley, Progressive, PNC. And then Thursday, we got Netflix, PepsiCo, Abbott, Schwab, BNY Mellon, US Bancorp, Marsh, and Travelers. And then Friday, we end the week with Truist. So a lot. And then this week will give us a clear picture of how corporate America is navigating inflation, geopolitical risk, and shifting consumer behavior. So a lot going on, and that'll kind of wrap up finance and focus as we get into wealth wisdom after.
Market volatility is normal, but its impact changes the moment you retire. During your working years, volatility is an opportunity. In retirement, it becomes a threat. A single downturn early in retirement can permanently reduce lifetime income. And in today's world, volatility isn't the exception. It's the norm. At Friar Financial, our dynamic retirement income strategy is designed to help protect retirees from the sequence of returns risk that most people never see coming.
All right, so welcome back to the Wealth Wisdom Workshop as we continue our series designed to empower women with clarity, confidence, and some financial strategies. Today, we're speaking directly to a group that has carried more than their share of responsibility: Gen X Black women. You've built careers, you've managed lives, you've supported parents, children, partners, entire communities. You've been the backbone, the stabilizer, the one everyone depends on. And now, as you enter your late 40s and 50s, something shifts. This stage of life brings clarity, it brings reflection, and it brings a new set of questions about what comes next. Turning 50 has a way of doing that. Inside, you may feel young, like you're just getting started, but time feels more precious and the questions get louder. What matters most to me now? What do I want the second half of my life to look like? Can I afford the life I envision? How do I balance living fully today with preparing for tomorrow? Retirement readiness begins with reprioritizing what matters most. And that's where we begin today.
Mm-hmm. And then when you start looking at retirement through a more intentional lens, everything becomes clear. It's not just about the numbers; it's about vision. It's about understanding the lifestyle you want and where your income will come from, and how your current habits support or hinder that vision. For Gen X Black women, this is a pivotal moment. You're old enough to have lived, learned, and earned, but young enough to make powerful financial decisions that shape your future. And that starts with defining your goals with intention. Where do you want to live? What does your third act look like? When do you want to retire? And is that timeline realistic in today's economic environment? Cash flows become the anchor. Understanding how much income you'll need each month helps determine whether major debt should be paid down, whether saving strategies need to be adjusted, and whether it's time to optimize income, both active and passive. This is the season to maximize retirement contributions while there's still time for growth.
Yeah, and as retirement gets closer, market volatility can feel more personal. Every dip feels like a threat to your future. But managing volatility isn't about predicting the market. It's about preparing for it. So if retirement is still 10 to 15 years away, history shows there is time to weather market cycles. Diversification remains one of the most powerful tools you're going to have. Spreading those investments across asset classes helps manage that risk and supports more consistent outcomes. And just as important, avoiding emotional decision making. Knee jerk reactions during downturns may feel protective, but they often lock in losses and derail your long term plans. So staying grounded and staying invested is the key.
Yeah. And then retirement planning is also about protection, protecting your future assets and your peace of mind. That means reviewing your insurance coverage, updating beneficiary designations, ensuring estate documents reflect your wishes, and considering long term care options. Social Security decisions deserve attention too, understanding your benefit estimates at different claimant ages, and factoring in longevity, health history, and family needs helps you make informed choices that support long term financial stability. Longevity. Gen X Black women are living longer, healthier lives. And that means your money needs to last. Your plan needs to evolve with you as you grow in age.
Yep, this stage of life isn't about slowing down. It's about fully stepping into your power. Gen X Black women are redefining retirement as a time of freedom, purpose, and joy. You're not just planning to stop working, you're planning to live more intentionally. Independence isn't about how much you have. It's about what your money allows you to do. Whether that means traveling, mentoring, giving back, or simply living without worry, your financial plan is the key that unlocks it all. So after decades of building careers, nurturing families, and holding everything together, now is the time to focus on you boldly, unapologetically, and with confidence. Working with a financial professional can help bring that clarity into focus, translating your goals, values, and priorities into a plan designed to support the life you envision. A detailed, relevant financial plan can replace fear with confidence. There are many moving parts: taxes, expenses, income sources, assets, liabilities, and of course, life's what ifs. But when you understand your what, when, and why, your decisions become grounded and intentional. If you insist on your professional worth, live within your means, save consistently, and take appropriate investment risk, you will be on your way to a solid financial future. Your retirement should reflect your ambition, your values, and your vision, because this is your time to plan boldly and live fully. So, Gen X Black women, we support you. We are proud of everything you've done in the community for us, and hopefully, this information has been helpful in allowing you to take the next step. Jeffrey, anything you want to add to that ending there?
No, I think you said it. You said that best it can be said. We appreciate our Gen X Black women. We can't say that enough. So we hope help you live the life so you can live your goals.
Absolutely. Absolutely. So next week, we'll finish up this series on the gender wealth gap, and the topic will be specifically about single women and what can do, because they're kind of out there holding it down by themselves. So they need these strategies as well to understand how they can attack this, because they can and are thriving in these types of environments. So until next time, we look forward to talking to you. Everyone have a great week. Take care. Bye bye.